Morning, Steve Freed in Chicago with the morning grain comments. Well, grain prices are lower overnight, led by wheat. Outside markets, you continue to see a rally in the stock market after the Fed decided to slow down their talk of increasing U.S. interest rates and show patience, and so that's got the financial markets up. As far as the grains are concerned, I think we saw yesterday wheat trade off its highs. Overnight, it's down another 20 cents. There is some people who think that wheat, number one, has digested all the Russian news. Number two, countries like Europe, Canada, Australia, and Argentina can all pick up the slack if the Russians do not export 7 million tons that the world thought they were going to do. And then when we look at all the different global prices, U.S. hard red winter wheat prices are probably the highest in the world. So the U.S. may not be able to take advantage of this based on price. We've also saw some India wheat being sold into the marketplace to try to replace what Russia may not export. Over in the corn and beans, we've seen active farmers selling here in the United States, both corn and beans. Crushers report very good ownership in the crush over the next, let's say, 2 months. And in the corn, you're seeing cash values continue to drop domestically as the farmers let go corn that they have. And they do have a record amount of supply as of December 1st. Yesterday, we got a bunch of USDA data. It was for budget regions coming out of the chief economist's office and projected what's going to happen in U.S. corn, soybean, and wheat supply and demands over the next 10 years. At best, this is a guess, but it's interesting in which they showed, especially in beans and wheat, a decline in acres on all three, corn, beans, and wheat, a fairly big increase in yields over that 10-year time frame. Also, especially in beans, increase in demand. So for beans and for corn, kind of saw, especially in beans, a steady decline in the carryout. Corn carryout staying around 1,700, wheat carryout staying around 660 over the next 10 years. So it kind of showed demand up, it showed yields up, and it showed acres, for the most part, down. So U.S. relying on some pretty good weather over the next 10 years to satisfy demand. Today we'll get a private estimate of 2015 U.S. acres by crop. Market's going to be watching pretty close to see what this group says. USDA basically called for 4 million less acres to be planted next year versus this year. Other than that, we'll be just kind of watching the outside markets, news out of Russia, news out of China, news out of Washington, to see if we get direction between the markets between now and the big January 12th USDA crop report. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe, profitable trading day. And if you have any questions for us, please use social media. Send it back to us and we'll get an answer back to you as soon as we can.